So that is why there are these international standards, the Financial Action Task Force international standards. The applicability applies across jurisdictions that subscribe to this intergovernmental body. It comprises of different governments, hence called an intergovernmental body. So now, amongst those 40 standards, we have a recommendation. It came up with 40 standards, 40 recommendations. And there is one recommendation 29 that is an establishment of an FIU as a center of receipt of suspicious transactions, which explains the existence of FIA. So as I explained, in the identification of proceeds of crimes, we are trying to do the prevention, the detection, we investigate where is the money coming from. Then we further hand over to the law enforcement agencies to do the prosecution. And now what happens thereafter is once someone has been convicted, there is confiscation. So there's part of our work is gathering evidence, financial intelligence, gathering information, money moved from here, from there, and it's from a criminal activity. Then we hand over to prosecution, and then penalties are imposed when someone is convicted, the judgments are passed, and then assets, whatever assets are accumulated from these crimes of money laundering are recovered upon confiscation. So that means that in our work, we basically follow the movement of money. Where is the money coming from? Who is getting the money? And where is the money deposited? Who is benefiting from the money? So the where, the how, the what, when, this is what satisfies. If you're in position to answer these questions, this is what gives the justification of whether the money is clean or dirty. If there are question marks, then that means there's suspicion, and therefore further investigation is done. And once we identify that there are proceeds of crime, then you're taken on for that, or the criminal is taken on. So how the money laundering occurs, it originates from the predicate offenses. What offenses, and what do we mean by it originating? Any money that you obtain from these offenses, the predicate offenses. Predicate means a minor offense of a bigger offense, a minor crimes. And the example of these crimes, any money, for example, that is obtained from drug trafficking, those are proceeds obtained from drug trafficking, and that is what we call the illicit proceeds. Illicit means illegal proceeds. Any money obtained from human trafficking, any money obtained from tax evasion, any money obtained from theft is amounts to proceeds of crime. So where there is a scenario where you obtain the proceeds of crime with the intention of converting these proceeds of crime to give them a legitimate look, they were in an illegal form, it's illegal money, and you have the intention of converting the process, going through the process of conversion or transferring these proceeds to conceal the origin. Remember, the origin is a criminal activity, those predicate offenses that we have highlighted. So that is what we call money laundering. Best trying to wash illegal money to give it a legitimate look, or illicit proceeds to make them legal proceeds. Conversion and the concealment or disguising the true nature of the property of funds with an intention of concealing where they came from is what we call money laundering. That are obtained from money legal activity, maybe human trafficking or drug trafficking. And then I want to withdraw the chips I want them to put worth the money I put in chips on a credit card. So that's trying to create the confusion of the audit trail so that it's not easy to track where the money originated from is what we call layering. Integration, now criminals are very much so confident they invest because they have been very successful with this transition of the illegal proceeds to legal proceeds. So those are the three stages of money laundering, how it manifests, or it's basically dirty money that has been obtained, placed into financial instruments, purchase of financial instruments, or placed in a bank, and then is layered through different instruments. Maybe purchase of a policy, maybe purchase of chips. Some of the money you purchase chips, some of the money you exchange at the bureau, some of the money you take a loan just to hide their money. Then eventually you get your food. It doesn't necessarily only include financial support. It may also extend to any support that is offered to a terrorist organization. Such as the logistical support. If you provide shelter to a terrorist, you've committed terrorism, you're financing terrorism. If you provide airtime, as little as airtime of 200 shillings to a terrorist to make a phone call, you have financed terrorism. If you provide food, lunch, 2,000 shillings, Uganda shillings to a terrorist to get lunch or food, you have you have financed the act of terrorism. So basically, any support that is offered to a terrorist organization is what amounts to terrorism financing. So that is part of also what FIA tries to combat, because these criminals they need funds to facilitate the acts of terrorism. And how they do it, they can launder money to these guys, that they can get involved in the criminal activities, obtain proceeds from the criminal activities, that is laundered money, and use it with the objective of concealing where the money was obtained and use it to commit the acts of terrorism. So that's why the two go hand in hand. The money laundered can be used to commit the act of terrorism. So you find that when you find what the distinction between money laundering and terrorism financing only applies where, with regard to the origin of the funds. With money laundering, it's basically illicit from an illegal activity. The predicate offenses, tax evasion, human trafficking, drug trafficking, corruption, fraud, theft. As opposed to terrorism financing, it might be both. It might be money from illegal activity or a legitimate activity. I might put up my business, probably a casino, to generate funds. Then I use the funds to commit terrorism. You are financing terrorism. That is terrorism financing. So for terrorism, it's both illegal proceeds and legal proceeds. Illegal money obtained from a predicate offense, and both legal money. When you put up a legitimate business, a legal business, then you obtain proceeds to commit the act of terrorism. So the stages now for terrorism financing also is another distinction between money that you can use to differentiate the two, money laundering and terrorism financing. While the other one goes through the placement, layering, and integration, this one requires the raising of funds. What business activity are they putting up to raise the funds, moving the funds, and they first store the funds somewhere, and then they use the funds to commit the act. So for money laundering, it's basically to conceal the source, whereas terrorism financing, they're trying to conceal the act, the terrorism act that has been committed. Their objective is not mainly on the source where the money was obtained, because remember, it could be obtained from just putting up a legitimate business like a casino. But mainly they try to conceal, moved, and then stored, and then now the bomb explodes somewhere and leads to loss of lives. So proliferation financing, on the other hand, as the third aspect that we, as the third aspect that we try to combat as FIA, is basically relates to any assistance given to someone involving the manufacture, the movement, the deposition of weapons of mass destruction. Even if you provide a financial service to someone who commits the acts of involving the manufacture of weapons of mass destruction or movement of weapons of mass destruction, it constitutes proliferation financing. So therefore, we are required to refrain from such things as restraining from providing a financial service to someone we know that is involved in the manufacture, or we are required to refrain from aiding the deposition or movement of such weapons. So basically, this is what we try to combat as FIA, and the mandate, we draw it from the Financial Action Task Force, because these are the three aspects that all countries internationally are supposed to combat. Now, the relationship between terrorism financing and proliferation financing, the money used, they both endanger lives of individuals, and yet this Financial Action Task Force is there to promote the global security. Any act or any crime that is there to distort the lives and security of people, that is what they come out to combat. So they put in place these principles, the 40 recommendations, to protect the global peace and security. They aim at protecting global peace and security, so that we restrain from availing funds to the terrorism. Once we constrain them and they don't have the funds to use to commit their acts, because they need the funds to rent a house, they need the funds for food, for those who are going to commit for the terrorists, they need the funds for airtime. So once we constrain these people, therefore we are protecting the entire the global world from the acts of terrorism. So that is how the Financial Action Task Force comes in with the international standards in order to protect the peace and security. So the reason why we are trying to combat this is it's the scale of money laundering is realized really with very big numbers of money is being laundered. Internationally, there's an estimate of 2 to 5 global GDP of money that is lost, about 1.87 trillion, according to the report of the United Nations Office on Drug and Crime. But domestically, we lose about 5% of our GDP to launderers. According to the report in 2021, that over 40 billion USD, an estimate of 40 billion USD is lost from Uganda. So then what this means is that this money laundering, if we don't combat it, it undermines the legitimate private sector. How does it undermine the legitimate private sector? Those who are genuinely in the business, the legal proceeds are outcompeted by those that have the huge chunks of money and have laundered the money from illegal activities or the predicate offenses. So therefore, it kills the business spirit of those with the legitimate process and pushes them out of the business. So therefore, we need to combat this. It undermines the integrity and trust of our national financial system. The investors would not want to invest in a country that promotes crimes, because now it promotes the use of proceeds from criminal activities. Therefore, if the measures are not taken, what that promotes, there's increment in the commission of the offense of fraud, tax evasion, corruption, and so on. So therefore, it undermines our integrity. The confidence and trust in our financial system is lost by the investors. And in the end, the outcome of this, we lose out on the revenue. Our economy is distorted, and the reputation still risk applies, because once now we are, for example, on the list of on the grey list of high-risk countries, once we are there, it sends an alert to global financial institutions that please be keen on the monies that are coming from Uganda. The monies that are coming from Uganda. Now, this is a directive by the financial. This is what explains the slow movement of business, because these are the repercussions. So it affects our reputation. Any money coming from Uganda is presumed to have ties to. So therefore, scrutiny. These are the changes that this is why the reason we need to put up, to have this collective responsibility to ensure that we have we put in place the sufficient controls to protect our financial system. So when it comes to the to the legal framework, we have both the international legal framework response to combating money laundering, and also we have the national. From the international perspective, number one is the Financial Action Task Force international standards that we have discussed, and also the UN Conventions and Security Council resolutions. Now, these UN Conventions and Security Council resolutions relate to targeted implementation of targeted financial sanctions in relation to whoever has been designated as a terrorist, or whoever has been designated as a proliferator for financing proliferation of weapons of mass destruction. So this is the UN that does it to designate those individuals that are involved in these activities, and they send out those notifications to all member countries, UN member countries, that please watch out for these individuals. If send out this notice, the notice comes through the Ministry of Internal Affairs. It notifies us as FIA, we also notify the rest. So it requires for countries to take immediate action and ensure that they freeze funds or adopt the travel embargoes for the travel bans for these individuals, to constrain them from movement to countries so that we do not promote the commission of their acts, to constrain them from accessing any financial service by freezing their accounts or not providing any financial service to these people. So that is what the UN conventions relate to, targeted financial sanctions, basically to constrain the terrorist organizations, the terrorists, from doing further conducting their terrorist activities or activities of proliferation of weapons of mass destruction. So the Vienna Convention also relates to combating money laundering. Now, this is the one that lays the groundwork for money laundering. It relates to, it lays down the standard principles that must have a uniform application in regard to investigations and extradition in relation to money laundering, that there should be a free exchange of information between the member countries when you're investing a money laundering case, and there should be provision to extradite someone to be tried back to their home area. The Palermo Convention now is about the transnational organized crimes, basically human trafficking, whereby it requires countries to prevent human trafficking and punish those who are involved in human trafficking, mainly against women and girls. So as we earlier mentioned, that the predicate offenses, one of them includes human trafficking. So it promotes the combating of these activities, because any proceeds obtained from human trafficking and then they are with the intention of converting them, that's what culminates into money laundering. So you see, the conventions relate to combating money laundering and terrorism financing. The UN Security Council resolutions relate to combating terrorism financing. Now, the Merida Convention is the one on combating corruption. We mentioned that one of the predicate offenses where money can originate from a criminal activity, to say that it is laundered, is corruption. So it also relates to combating money laundering. The International Convention on Suppression of Terrorism, basically punishing those involved in terrorism financing. So this forms part of the international perspective on combating money laundering and terrorism, as well as the Financial Action Task Force 40 recommendations, which we have highlighted briefly about earlier. So you will ask yourself, you're speaking of the Financial Action Task Force. What is the Financial Action Task Force? This was formed in 1989 by a group of G7 countries. They came together. And it's the one that is in charge of formulating policies. And these policies are called the 40/40 recommendations. They are global. Therefore, this is a global watchdog on combating money laundering and terrorism financing. How it comes up with policies that all member countries are supposed to adhere to, the minimum standards for an effective AML CFT system. So it also monitors the implementation of these policies, how it conducts the mutual evaluation. That is why it comes up with the lists of those countries that have deficiencies in their AML CFT system, gaps, and puts it on their website. That is the list of high-risk jurisdictions. And we are on that list, the gray list. So it comes up with an action plan of issues that you're supposed to address. And when you sufficiently address them, you can get off the gray list. So you have to address them. And there is a group that they nominate called the International Cooperation Review Group to monitor your implementation of these action plans. So the framework, we've discussed the international perspective. However, we also have the domestic hours here. But what you have to note is whatever is in the domestic legislations is borrowed from the 40/40 recommendations, whereby we are addressed, since we've mentioned that the 40 does the mutual evaluation to evaluate all countries, to monitor the compliance. How they do it, they do a mutual evaluation to evaluate your performance. So when they do your performance, they do it based on they assess you on two aspects, the technical aspect and the effectiveness. Where the technical aspect, they assess the adequacy of your laws. Have your laws emulated exactly what is in the 40 recommendations, the principles? Have you sufficiently addressed them? That is why the Anti-Money Laundering Act mirrors the 40 recommendation. So you find that from the evaluation, we are compliant on all the 40, that we have sufficiently addressed them in our laws, in the Anti-Money Laundering Act. So in brief, the law did not just come from anywhere. We are trying to comply with the international standards by embedding the standards into our law. And the reason being, as earlier explained, that it's a collective responsibility. If other countries have guarded themselves, we also have to guard ourselves from the criminals manipulating this system by complying with what is in the laws. So basically, our law talks about the domestic. Before we go to the domestic, in a nutshell, what the international standards talk about, they talk about the AML CFT policies, the money laundering and confiscation, whereby all countries are required to criminalize money laundering and provide for confiscation measures. So in our law, we criminalize money laundering and we provide for confiscation measures. We are also required to criminalize terrorism financing, which we have done in the Anti-Terrorism Act, and also criminalize preparation financing, which we have done. So the preventive measures, now these are the ones in the Anti-Money Laundering Act. Preventive measures like due diligence that you need to do on your clients, obtaining beneficial ownership information, reporting suspicious transactions. Those are the preventive measures. Now, those are in the 40 recommendations. Transparency and beneficial ownership, where you're required, if you're dealing with a company, you get information regarding the shareholders. So this explains why the URSB requires you to submit the beneficial ownership information. Who are the shareholders of the casinos as companies? The powers and responsibility of competent authorities. I mentioned that we work hand in hand with other competent authorities. Therefore, these 40 standards provide for how we need to conduct business with other competent authorities. What are the competent authorities? What is the Lotteries and Gaming Regulatory Board supposed to do when it comes to supervision of AML? What are its powers? How far can it go? And that's a requirement for us to put in the Anti-Money Laundering Act, which explains the provision that gives the sole responsibility to the Lotteries and Gaming Board to enforce AML CFT compliance, because the standards are saying these competent authorities must be aware of their powers and the laws must give them the powers to enforce AML CFT compliance. So the same recommendations in if we are to look at the sections briefly, because there are 40 in number. We shall not go through 1 up to 40. We don't have enough time to do that. But just in summary, they still speak to the international cooperation. In our investigations, how are the investigations made smooth in terms of cooperating with countries? If properties are laundered, since we mentioned that money laundering transcends beyond borders and money moved to US to disguise the origin that it was from human trafficking, how then do we cooperate with the US to ensure that we get that information regarding to the properties that this person has put in place in US or developed, regarding the bank accounts or the funds that this launderer has in US or in Kenya or in Tanzania? So that is the international cooperation in terms of exchange of information, in terms of investigations or prosecutions. That's what the principles provide for, that countries have to cooperate, even when it comes to extradition. So these are the recommendations. There are 40 in number. They provide for the preventive measures that you're supposed to undertake, the powers of supervisors, the regulation of the DNFBPs. You fall under the category of DNFBPs, designated non-financial businesses and professions. So it guides the Lotteries Board on how to regulate you on AML CFT compliance, so on supervision. So it provides the guidance, provides the guidance to all countries regarding the supervision of the sector for the competent authorities. So we mentioned that the mutual evaluation for Uganda, the mutual evaluation took place in 2015, but the report came out in 2016. And you note that the ratings were not really good in 2016, whereby we only had 4 compliant, largely compliant, 14 areas of those 40 recommendations, partially compliant, and 21 non-compliant. But however, when there is progress in your performing, when the casinos are putting in place these controls and there is improved compliance, when the casinos are submitting the beneficial ownership information to URSB and there is improved compliance, there is progress. When the casino, when the Gaming and Regulatory Board is doing their role as the supervisor, the on-site inspections, the number of the on-site inspections, the statistics, they are sanctioning the casinos for non-compliance, the statistics are there. Then you apply for a rating once there is progress. So that explains the movement from 4 areas where we are compliant to 12 areas, because there was progress, so we needed to report on the progress, then to 14. So that is how the mutual evaluation is done. Poor performance, they give you the action plan, things to address. You try to improve. There's a reporting period. You report the progress. They will rate. You apply for a rating. But here, with supervision, the Lotteries Board, we have done our part. We have, these are the number of inspections, and we have done them on a risk-based approach, because that's what the principles say. We identified the risk in Casino A or Casino B, and we moved immediately according to the risk. It's the risk that informed us. We do our off-site inspections, on-site inspections. The statistics are here. These ones that have not registered with FIA are this, and this is what we've done about it. So you have to read, you find that the Lotteries has to refer on that recommendation on supervision of the sector and demonstrate compliance. So when it demonstrates compliance, then it boosts our compliance level regarding that specific recommendation on supervision of DNFBPs. NGOs also fall under that. When they boost, we do the same, then we are able to report. So you find that we have to move together. If the casino is moving along, casino business is moving along, and the NGOs are not moving, it puts us down as a country. So it's a collective responsibility. That's why we are doing the sensitization to see that we are all on board, on the same page. So that explains the re-ratings, just basically reporting the performance, and there was a change, an improvement in the performance. So the action plan that we mentioned following the mutual evaluation, these are the areas that were highlighted and we have struggled to address. We have been working tirelessly to address this to ensure that we get off the grey list. They identified the strategic deficiencies in our AML system when it comes to compliance, when it comes to the gaps in the law. They identified these and we have tried to address most of them. So these included adopting a national strategy, which we adopted on combating. It's on our website. You might need to read it. It involves the different responsibilities attached to different agencies in regarding to enforcing compliance with the 40/40 recommendation. So risk-based supervision, that is the lotteries has to do risk-based supervision of your sector. We have to demonstrate that even other sectors, both financial and the designated non-financial businesses where you fall. Demonstrating that the law enforcement agencies apply the money laundering offense consistent to the identified areas is also one area that we had to address, and beneficial ownership information, which explains the pressures from the URSB for you to submit the information of the shareholding capacities of the companies. So that's basically about the mutual evaluation. What we wanted you to understand is where FIA is coming from to see that you adhere to the law, because the law mirrors the 40/40 recommendations, to enable us to report on our progress so that our compliance levels are improved, to enable us to get off the grey list. So in a nutshell, that is what it means. That is where we are coming from. It's not only us, even other countries, because you find that Kenya is also on the list of high-risk countries. And we have discussed the repercussions of being there on the high-risk countries. You wouldn't want to be there. There are repercussions. Nigeria is on the list. South Africa is on the list. So they all have items that they have to address like us to get off. But we are confident that we are likely to get off, because the one area that was left was regarding submission of beneficial ownership information. And there's a face-to-face meeting that has happened. So we are confident, we are hopeful that we shall get off. So the international perspective mainly comprises of that, which we have to mirror to the national perspective. That is our laws, the Anti-Money Laundering Act. So for you to know what laws we have in place, we have the Anti-Money Laundering Act of 2013, which was amended in 2017 and also amended in 2020. So you'll ask yourself, why these subsequent amendments? We are trying to address the recommendations of FATF, where they find that you did not sufficiently mirror the 40 recommendations. There's a recommendation you left out or did not sufficiently provide. Try to mirror in your law, then propose an amendment, which explains why we went back to amend. And the same for others where you see different years. So we have the anti-money laundering regulations. Now the regulations guide the implementation of the act. And now these are the ones that mainly explain the obligations that you're supposed to comply with. On the combating terrorism financing side, we have the Act of 2002, 2015, and 16. And the regulations that guide the implementation of that act. So basically for terrorism financing, the law is criminalizing terrorism financing and proliferation of weapons of mass destruction. Other legislations, the BOU guidelines, just to provide guidance to the financial sector, the capital markets, the insurance, the acts, the respective legislations, these are only to guide us on the interpretation of who is an accountable person. If we want to know the stock dealers, then we refer to the Capital Markets Authority Act regarding who falls under that category. If our law is speaking of stock dealers, who falls under that category. If we want to know financial institutions, we refer to this Financial Institutions Act regarding to who falls under that category. The lotteries, we refer to the act regarding to who falls under that business. If the second schedule of the Anti-Money Laundering Act says that so-and-so operating the lotteries business, then we refer to the Lotteries Act to explain, to see the scope of who falls under that category. So the rest of the legislation just guide us on the interpretation of the accountable person. So you'll ask yourself still, how does money laundering manifest? How does it occur in our business? It occurs through the use of different instruments. For example, the value is the cash, that casino chips that I use, the machine credits, the cash orders, the checks. I don't know whether the Ugandan business uses this because I've not been to the casino. I should get an invitation from one of you to see the operations of the business. So these are the FATF findings regarding to the operation of business, and how FATF comes up with this. It does case studies in different jurisdictions, how the business operates. So you find that while some may apply to you, whereas other methods used may not apply to you because some countries are advanced in terms of the business. But the general picture looks like this. Some use cash, the instruments used. So, and where there's cash, exchange of cash, you can't keep track of the audit trail. Therefore, it facilitates the laundering of money. So the nature of the business involves structuring and creating the different layers. I purchase chips, but I withdraw the money by telling you to put it on my account, or by use of check, or by use of a credit card. So I'm creating different layers. I gave you money by cash from an illegal activity, but I want it back, put it on my account, on my casino account, or put it on a credit card, or put it by check. And for casinos that are international, that operate across the jurisdiction, someone can decide to go and withdraw it from another jurisdiction. There are casinos that allow that. I don't know whether they operate in the Ugandan business. But the use of the casino accounts, the credit accounts, where you're allowed to play on credit, is also another area. The intentional losses, the winnings, and the intentional losses, the currency exchange, these instruments, the complacency of the employees not to do enough due diligence, or to allow people to play without pay and pay later, but when they pay later, they pay at a higher value than the expected value. So that is also promotes the acts of money laundering, the use of credit cards and the debit cards and the false documents. So how these instruments are used, for example, most often they are used for money laundering by converting the illicit funds from one form to another. That, like we mentioned, I use cash, purchase the chips, then I convert the cash. I want to withdraw it using another form of instrument. So the casino chips are issued by casinos, and they are used. Someone can obtain the credit chips, which might be used by the criminals. So buying chips for cash or on account, then redeeming by way of check or bank draft or money transfer is another area that the criminals are likely to use, whereby one obtains a chip purchase voucher or a similar value instrument, and the repayment then is requested for by check or by draft, and maybe even the transfer is made to another jurisdiction. So a purchase of chips from clean players at a higher value. Someone might purchase the chips at a higher value. This also happens in the casinos at a higher value, higher than the face value. And this is referred to as the value tampering. So this criminal is not mindful about the values of the chips, is really not an issue to them, but they may decide to purchase them at a higher value. So use of the casino trying to cash out the checks. In some jurisdictions, the casinos are allowed to, the winning checks are allowed to be payable to them in cash. So they're also using the chips or currency in illegal transactions, whereby the currency from the casinos is used to purchase the drugs or illegal or goods. So carrying chips from a drug transaction may also contribute to one claiming an alibi for an offense, a predicate offense. So casinos are also used as currency, may be taken across the borders. You purchase the chips, and the chips can be exchanged, whereby they're returned by a third party who then cashes them out. So that's another area that makes the business high risk. So purchase of large numbers of casino gift certificates. I'm not certain if this applies here, and also purchase of casino reward cards, where money launderers use illicit funds to purchase casino reward cards from legitimate customers, paying them a premium above the value and reward. So the case scenarios that we can look at, for example, in November 2007, 2 men were convicted for their part in a scam, whereby one robbed a check from a New Delhi railway station in India. And among the 2 items that were stolen was the Barclays checkbooks. The trail indicated that during the investigation, the trail fell on to a casino in London where the cash was withdrawn from. So the defendants used to purchase gambling chips. Both men claimed to have gambling addictions. However, this suspicious transaction was not reported. So there's another scenario of the 2 Asian males in Belgium who did not play. They entered a casino, but however did not play, but withdrew the money, collected the funds through a third person. So the transactions were likely to be linked, were found to be linked to human trafficking, but not playing at the casino and collecting the money through a third person. They wanted to leave a paper trail in order to justify the origin of funds. So trying to disguise that the money is from a win in a casino, and yet actually the money was linked to human trafficking. The casino is just an avenue used to cleanse the money, to launder the money, creating a paper trail that it's legal money. I went, I had a win, I played, I got my money. But when initially the money was attached to illicit proceeds or an illegal activity. So the casinos also are fond of promoting crime, like theft, also related to drug trafficking, where proceeds from drugs are used to purchase the chips. So this case scenario, consignment addressed to a person contained approximately 3.4 kilos of opium concealed with the contents. And the investigation revealed that the person was actually a customer of a casino and had conducted a transaction, had conducted approximately over 50 betting transactions, and the chip cash outs of 880,000. So very little casino gaming play was recorded for the person, and it was assumed that he used the proceeds from previous importations of drugs. He used the proceeds from previous importations of drugs to purchase the casinos, and then he claims the winnings. So that is how casinos are used as an avenue to launder money. So you might need to take note of the 3 aspects in these case scenarios. You need to take note of the technique that the criminals use, the mechanisms that they use, and the instrument. The instrument are those that we have discussed, the teller withdrawing it using the cash or check or casino chips. Those are the instruments. The mechanism is basically the casino, a system, a thing that carries out the part of the process. For example, money laundering mechanism in a casino. So the technique now basically is an action or way that activities carried out. For example, purchasing a cashier's check. I bring illicit proceeds from drug trafficking, and I instead purchase a cashier's check. Or I purchase chips, and withdraw my chips or winnings through use of a cashier's check. So you need to take note of the techniques that the criminals use and the instruments that they use to commit the acts of terrorism, rather to money laundering in the casinos. So that is how the sector is exposed to the risks of money laundering through use of the different instruments in the casinos and the techniques that the criminals use, basically bringing illegal proceeds from drug trafficking, from theft, and put it in a casino, involve in a play just to disguise the audit trail to create that it's legitimate money, I want my money, but when eventually it is illegal proceeds. So that is the risk that you're exposed to. Now, from the FATF recommendations, they require that every country needs to understand the risks that they're exposed to as a country by assessing the risks and then come up with mitigation measures. So this is where we came from. That is FATF recommendation 1. And this is where we came from as FIA to come up to conduct a national risk assessment to understand the risks in the different sectors. And what this risk assessment revealed is that the casinos are high risk. So what this recommendation requires, recommendation 1, is that when you assess, come up with measures to mitigate. So even training now, we shall demonstrate that one of the measures we have come up with is we are sensitizing the sector. Because now this report highlighted that there is lack of knowledge on AML, CFT in the sector. So therefore, also in our risk-based approach to demonstrate supervision as FIA, see that we have to do on-site risk-based supervision, on-site inspection to demonstrate that we use the risk-based approach. So every area here where it's high, we have to demonstrate a risk-based approach in terms of supervision. So you find that the frequency of inspections have to increase. These are the demands of the international standards. In banks, because they're high, in real estate agents, because they're high, with casinos, because they're high, with lawyers, because they're high, and others. So this is our approach as FIA, and this will be the approach of the lotteries gaming board, because they are the sole responsibility lies on them. So now if the lotteries performs on this, they have to make reference to this national risk assessment and move accordingly. So now how these findings guide the sector, the players, is in your dealings in the nature of business, you also have to make reference to this report to ensure that you conduct customer due diligence on a risk-sensitive basis. We shall describe this in your legal obligations. What do we mean by using a risk-based approach? So therefore, the risk-based approach applies to both the supervisors and to the sector players. How to the sector players? Because we've discussed how the supervisors have to do this. The sector players, you have to make reference to this and say, find out the customer due diligence. If you find out that the clients that have come to play is a lawyer on that form, client information form that you obtain, and you remember that the national risk assessment had that lawyers are high risk, and the law requires that where there is high risk, adopt enhanced due diligence. So this will guide you that who am I dealing with? Is a person coming from a sector that is high risk? Are those coming to play from a sector of dealers in precious stones and metals that they are high risk? Because this gives you an indication that because they are in a sector that is high risk, there's a likelihood, I didn't say that there's a chance that they have loaned, that there's a likelihood that the accumulation of funds they are bringing in could be a process of crime. So for you to safeguard the casino, then you must adopt enhanced due diligence. What do we mean by enhanced due diligence? You get extensive information to identify this person. What do you do? What is the source of funds? What do you do? What is your name? What is your address? Then you're also supposed to do ongoing monitoring. If person has been purchasing chips, this worth 2 million, there's a shoot to 200 million. There's a shoot to normal increment. Then it will raise suspicion. Therefore, you have to report to FIA. That is what we mean by ongoing monitoring. So for enhanced due diligence, we mean sufficiently identify this person by getting additional information, conduct ongoing monitoring, and also obtain senior management approval. The customer-facing staff that take on the business, that allow these people to purchase the chips, are not allowed to just take on business for the high risk without getting senior management approval, probably from the boss or the manager of the casino. So that is how the national risk assessment guides the casino players and the supervisors as highly discussed. So you'll need to make reference to this to know, who am I dealing with? Are they coming from a high-risk sector? Then what am I supposed to do? Have I done what the law says I'm supposed to do? The A, B, C, and D, ongoing monitoring, senior management approval, and additional information to identify this person. So that's the importance of the national risk assessment, the background where we came from, to understand our risks, and not just to have the report, but to refer to it to mitigate the risks. So that's the whole rationale of the national risk assessment. So then these FATF recommendations, the laws that we have discussed that mirror the FATF recommendations, are basically about the AML CFT measures, basically the legal controls that you're supposed to put in place, both the financial institutions and the designated non-financial businesses and professions where you fall. So these are not only you as casinos or gaming and lotteries are supposed to adhere to these legal provisions, all accountable persons. And by all accountable persons, we mean all those avenues that the criminals are likely to use to launder money. And besides you, we also have NGOs, churches, real estate agents, dealers in precious stones and metals, all financial institutions, all insurance companies, all firms licensed by the Capital Markets Authority. So even the professions, lawyers and accountants. So all these form part of the accountable persons, and they report to FIA. So the legal obligations, therefore, the AML measures that you're supposed to put in place, the anti-money laundering. Anti-money laundering means combating money laundering, that you need to put in place, include in summary, but we shall discuss later on in detail. A registration, it starts with registration for all those that have not registered with FIA. Registration now has moved from the manual registration to the electronic registration, e-registration. How does this occur? You require a website, www.fia.go.ug. Under registration, you'll see a link called Go AML. AML is anti-money laundering. Go AML. We've been using this a lot in this presentation, so I'm very certain that you won't miss it. So Go AML link, click on the link. When the link opens, you'll find two environments, the production environment and the test environment. Please, please, please do not click on the test. Register on the production. When you register on the production, it will bring a request for you to, it will bring the fields that you're supposed to fill as an administrator. Who is an administrator? Now, this is a money laundering control officer that you are appointing. What do we mean by a money laundering control officer? The law requires under Regulation 6 that you are supposed to appoint a money laundering control officer. This money laundering control officer should be of a senior managerial position, with the exception of the CEO or the equivalent rank. So now the details of whoever you have appointed to be a money laundering control officer, a liaison person between FIA and the casino, those are the ones you're going to fill in those open fields for the administrator. So when you fill in, those fields also require you to create an account. So you put an account with a valid email and password, because the e-registration certificate at the end process, at the end tail, will come to that email. So after having created an email and you filled those fields, after having put in the valid email and filled those fields, then the next step is attachments. You click on attachments. Now, the website has the two forms. Those are the attachments with your registration attachments or permit or license. You're supposed to attach Form 1 and Form 3 of the money laundering, rather, where Form 1 requires you to avail us with the details of the casino. It has Part 1 and Part 2. Part 1 does not apply to you because it's for those registering as individuals. Part 2 is for those who are registering as a legal entity. And in this perspective, the casinos are legal entities. So it's basically just requesting for details about the casino, the name of the casino, industry will be casino or gaming or lottery business. And the representative will be the head of the casino, the email, PO box, name of CEO, the TIN of CEO, the address, the registration certificates number, probably the ones you got from URSB. Then you attach the certificate of incorporation and the license to operate from the Lotteries Board to operate as a casino. And also now Form 3 requires you to avail us with information of the money laundering control officer. What is the name of the person appointed? What is the rank, email address, telephone contact, and who supervises this person? So basically details about who you've appointed. That is the money laundering control officer. Once you have filled the forms, attach a national ID of the control officer that you've appointed and the permit as a certificate of incorporation to operate. So those attachments, 4 attachments, when you have clicked on attachments, are the ones that you have to attach. Meaning you will have to scan them somewhere, save them somewhere, and attach them. So once you have attached, then the next step is submit. Once you submit, on our end, we have a review team that will review. If there's anything missing, it will bounce back. You'll get an email, whether you're successful or not successful. It will bounce back with a reason for rejection of the registration. Probably you missed a document or you did not fill any field, you left out any field. So once you rectify the issue, then the verification team approves, and once the verification team approves, that automatically the certificate comes to you. That is the e-registration, where we have moved from the manual to the e. So another requirement is you undertaking proper customer due diligence. We shall discuss what CDD means, customer due diligence. When do you conduct it? What information do you obtain for the different clients? If I interface with an individual client who is a national, what information am I supposed to get from them? If I interface with a foreigner, what information am I supposed to get from them? If it's but I doubt if companies bet, people, you receive clients on an individual basis. So verification and identity of beneficial owners, that is in the event of a company. Developing the robust AML CFT controls, maintenance of records, the requirement that records are supposed to be kept for a period of 10 years. By records, we mean the information, customer information that you obtain regarding their identity. What is their name? What do they do? What is their source of funds? And also the transactional information. How much chips are bought worth how much chips are withdrawn by check, worth how much chips are put through their casino account, worth how much. That's the transactional information. So filing suspicious transaction is a requirement once you form suspicion based on the techniques that we discussed, based on the unusual plays, based on the unusual behavior during the play, even behavior amounts to suspicion. Based on the profile, you know someone is known to purchase chips worth this much, maybe 1 million or 500,000, but there is an unusual fluctuation in the amount of chips that they are purchasing, and yet from your customer information that you obtained, you knew this person to be to own a business, maybe a small company that is not worth generating the money that they are using to purchase these chips. So in that narrative, that is what helps you to form suspicion. What this means is, therefore, you need to know your clients very well, because if you know Fiona to be a lawyer and she's earning 500,000 as a lawyer, or approximately 500,000. And Fiona now comes to purchase chips worth 20 million in a go. And you've known Fiona to be purchasing chips within a range of 500, 600, 700. That is unusual, supposed to be reported. So the unusual fluctuations, or the frequent plays where someone was not initially doing so, but there is a change in the behavior in terms of the plays. And when you equate the money, what they are playing is unusual, so you report. So those are some of the indicators in your nature of business. I'm just trying to give you an indication. There are so many, but I'm just trying to give you an indication. Basically, anything that is unusual or goes out of line of your knowledge of a customer. You have profiled your customer to be this, but your customer turns out to behave in an unusual way. Not by behavior, I mean the transactional, in terms of the plays, in terms of the purchase of chips, also the physical behavior. So maybe engaging in minimal play, then they withdraw the winnings. They first wait to withdraw the winnings and withdraw them later. Some or immediately withdraw, engage in minimal play, and they want to run away with the wins immediate without getting involved in the further plays. So risk assessment is another requirement, training of staff, putting in place internal controls, which we are going to discuss in detail, because this is very important for you to feed in the annual compliance report template. We've had a challenge of people complaining that we don't understand the template. So now the template relates to these obligations. If you understand the obligations, the work will be made simpler for you to fill in that template, because what the template is talking about, have you complied with these obligations? A, B, C, and D. How have you complied? If you have not complied, why didn't you comply? So to explain what customer due diligence is basically getting information to identify your client, and it doesn't stop at that. You need to verify your client. So it relates to identification and verification of your client. When is it supposed to be conducted? Before or during the establishment of the business relationship. So where you fail to obtain information, customer identification information from your client, you are required, the law requires you to refrain from establishing business relationship with a client. Or if there is an existing business relationship and you engage the client to give you the information that they didn't give you initially, you're required to terminate that business relationship. So carrying out a transaction, in the event that you carry out a transaction for a person who is not your client, there are those that you know that they are optional. You don't know them to have been playing in your casino. It's a one-off, a walk-in. So for those such people, new faces, you're supposed to, before you carry out a transaction, before there's a purchase of chips or engagement in a play, you're supposed to do customer due diligence. Before an international or domestic transaction, if someone who has played in a casino or lottery gaming business requests that you transfer their funds on their account through making an international wire transfer to another jurisdiction, you must obtain information. Where is the money going? Who is the beneficiary? And it's originating from where? That's what we call the complete originator and benefit information. So customer due diligence has to be done before there's an international or domestic transaction. Where there's suspicion, where you form suspicion in the areas that we have highlighted, based on the indicators that we have highlighted, the unusual behavior or unusual activity in terms of plays, number of chips performed, or played, you are supposed to conduct customer due diligence. So these are the scenarios of regarding when you're supposed to conduct CDD. CDD is customer due diligence, and they're listed under the Regulation 14 of the Anti-Money Laundering Regulations. So where the risk is high, you're supposed to conduct enhanced due diligence. We mentioned that the National Risk Assessment will guide you on the risk rating so that you know whoever is coming from this sector is high risk. So enhanced due diligence, we earlier mentioned, relates to additional information on the identity, senior management approval, and obtaining the source of funds for the person who is your client, and ongoing monitoring of the transactions. May monitor the trajectory of the chips in terms of the fluctuations of the chips. Someone purchases this worth, then there's an increment, So that is what we call monitoring. someone has played and there's a win, someone has purchased chips this month, this worth, then there's an increment. So basically that is the monitoring of transactions. So, or the credit, how much money is on the credit card of client A who has played, how much money is posted on this account of client A, B, so that you monitor the information regarding to the money is on their casino accounts. So regulation 16 is on third-party due diligence. If you as the casinos would wish to hire someone, a third party or a company, to do for you the customer due diligence, that whoever comes in as a client, we are outsourcing this function, this responsibility. So that is a third party due diligence. But however, the law says that the sole responsibility remains on you. If there are gaps, any fault, you're the one to blame, not the one who got the customer due diligence. So there has to be an agreement between you and whoever you have brought in to outsource this function, with clear duties and responsibilities. But you have to take note that the fault still remains on you. So you have to ensure this person or company does their work. Verification of identity. We mentioned that customer due diligence is about identification and verification. So how then do you verify? You verify by obtaining the purpose and nature of business. What do they do? What is the nature of business that they do? What is their occupation? That is the information regarding their occupation. And what is the purpose for the play? Is it pleasure? Is it to make money out of wins? That is what we mean by obtaining the purpose. Is it just to pass time? That is what we mean. Is it just to spend? So that is what we mean by obtaining the purpose. The financial status and the capability of one to enter into the capacity. Capacity, we mean someone where someone plays on behalf of the other. The law requires that whoever is acting on behalf of the other has to get authorization. And you as a casino, you must obtain authorization, written authorization that I'm nominating so and so to act in my capacity on behalf of me. That's what the law says. So when it comes to verification, you do not just interface with someone who is coming in as a third party. There has to be authorization to act on behalf of the other, because criminals use that. He doesn't want to go in. He doesn't want to reveal himself, but instead goes through a third party to be the one to come and do the purchase or something. So regulation 19, establishing the identity. Now from 19, 20, 21, 22. This is with regard to if you interface with an individual who is a national, what information do you obtain? For example, you need to obtain a national ID, a copy, telephone contact, residential address, residential or email address, the introduction letter from an employer, if they are employers, and the TIN. With regulation 20, you suppose this is in the event that you interface with a foreigner, you're supposed to obtain the TIN, the residential address, the passport for the foreigner, the date of birth, and the nationality. So how you verify the foreigner, verification, we mentioned of identification and verification. For the foreigner, you can verify them through requesting for information. The request should be made through the Uganda Citizenship Immigration Board. Request regarding what? Their legal stay in the country. Has their visa expired? Are they here legally or they are here illegally in the country? So, or also you can verify from their home bank of the foreigner. So in the event that you interface with the local entities or companies, which I don't think applies to you, I think individuals are the ones that come in as clients to play, not companies. But in the event that companies do, the law provides us for information they're supposed to obtain from the companies, both the local company and the foreign company. For the local company, the trade name, the business name, the date of birth, passport of those who are managing and or owning the entity. On the other hand, for a foreign company, still the trade name, business name, office address of this company, the TIN. And in case a person is authorized to act on behalf of that foreign company, the authorization has to be you ask for the authorization for the person to act on behalf of that foreign company. So the rest also, if you interface with the partnership company, that partnership deed has to be obtained, and information regarding the partnership, the name of the partnership. If it's a trustee company, that trust deed has to be obtained, a copy. And Regulation 28 is about record keeping. Records are supposed to be kept for a period of 10 years. And the reason behind this is in the event that FIA is doing an investigation, or the lotteries board needs a certain document to do an investigation regarding a suspicious transaction, that information should be readily available. In that the retrieval, it has to be retrieved in the shortest time possible to aid the investigation. So that's the reason behind record keeping requirements of a period of 10 years. So we as FIA, or if the NGO Bureau does, rather if the Lotteries Gaming Board does the inspection, it will try to test on your archival process of the information. First of all, are you keeping, because record keeping is in regards to the customer information, the identification and verification, and the transactional information. Is this information in place? Are you keeping records for your clients and the transactional information? So they assess that if the records are there. How are records kept? Are they kept in the manner that they can easily be reconstructed? Now that's the easy retrieval. If there is an investigation, can you readily provide that document? So now they test your archival process, whereby they can ask you for a record that is way back, like 8 years ago, 5 years ago, to see if it will take you 2 weeks to give the Lotteries Board that record. If it does take you a longer time, then what that means is that in the event that there's an investigation, this will distort the investigation. Therefore, you're not complying with the record keeping requirements. So that's what the law says. Politically exposed persons, these senior officials entrusted with a prominent function in government. So it entails both the domestic PEPs. PEPs means politically exposed person, and the international PEPs. So for the international PEPs, basically those that fall in the senior management of any international organization. If you interface, what the law says, if you interface with any of these people, an individual who is of a senior prominent function in government, like the parliamentarians, you are supposed to put in place risk-sensitive mechanisms to identify this. The expectations of the Lotteries Board would be that you must maintain a list of the politically exposed persons, or a database, whereby once you interface with the parliamentarian A, you're quick to search through your database, and it will flag out this person, that this person is, it will give you an indication, and this person is on your list. So that you don't just take on business with this politically exposed person. The reason being is that by the nature of the office that they hold, they are likely to misuse the office to launder money. We have mentioned that one of the predicate offenses is corruption. They hold big offices. So there's a likelihood that proceeds from corruption can be obtained and put in a casino. So you're not just allowed to deal with these people on a free range. You are supposed to first identify, have in place a system that enables you to identify that, oh, you're so-and-so, what do you do? I'm an MP. Then you check your list. Oh, he's an MP. Then you have to obtain the source of wealth for these politically exposed persons. What do you do? I deal in this, I deal in this. Or senior management approval. You don't just on board. The managers have to approve this client who is a politically exposed person. These are the legal requirements regarding to how you need to deal with the politically exposed persons. So Regulation 30 is about the foreign branches. If the casinos here operate foreign branches, what law do you follow in terms of obtaining customer due diligence? That is, the law is saying the host law has to be followed, not the law where the casino was incorporated, the international casino. You have to follow the law of the host country here where you're operating business. So customer acceptance policy, you are required when it comes to implementation or developing policies. This is one of the policies that you're supposed to have in place. On top of the anti-money laundering policy, you need to have the customer acceptance policy or the KYC policy. So some institutions instead embed all those in one policy, or you might decide to have distinct policies. So the AML policy, our expectation is that it should mirror all these legal requirements. The way our law mirrors is the recommendations. Also, you have to get these requirements that we are discussing right now, so that your policy now explains that for politically exposed person, for example, this requirement, this is how we are going to comply. We are going to create a database that will be maintained by this officer, compliance officer, the Lotteries Board. If it's the Lotteries Board, because they're also accountable persons. So if it's the casino, that our compliance officer is going to have this database, and it will be maintained by so and so. So the policy has to have that allocation of responsibilities, that so and so will do this. That we within, when a client comes to play, we're going to issue out this form. And on the form, we shall include occupation, so that we find out the source of fund of the player, or whoever has come to play, whichever term you use for those who come to play. So that we shall obtain, and down there on the form, there's senior or manager, this signature, where it requires the manager to first approve you to take on that business. So in your policy, you're explaining that this is how we're going to implement these controls regarding to the PEPs, that there'll be the manager so-and-so will approve this business relationship before it's introduced, that this database will be in place to identify the PEPs, and it will be maintained by so-and-so, that the source of wealth will have to reflect on our customer due diligence form. So basically, that I can't give an illustration of each obligation that we have discussed because we have a very short time, but that is how the policy has to look like. Another illustration would be suspicious transactions, that internally, the suspicious transactions will be escalated from this officer A within 2 days, who within these hours or these days, who will escalate it to this manager or this money laundering control officer, and the money laundering control officer will escalate it to FIA, whereby you state the time frames of the escalation, and whereby you state that at what point are you going to engage the client to find out additional information to clear the suspicion. Because when you get the suspicion, ideally you're supposed to engage the client to see what changed. Did you sell your land? Did you get a win in another casino, that you came to this casino with this huge chunk? So that's constant engagement of a client to clear the suspicion has to be there before you report to FIA. If they're hesitant on clearing the suspicion, then that's when you report to FIA. If they don't provide you with enough information to clear the suspicion, then that's when you report to FIA. So that still with the suspicious transactions, we shall maintain a file that reflects what has been resolved, what has not been escalated to FIA, that has been resolved internally. So the policy is basically stating the procedure step by step, that the activities that you will undertake, the step-by-step process you will go through to implement these obligations internally. So wire transfers, we mentioned about any transfers to other jurisdictions. You have to obtain complete information about where the money is originating and who is going to benefit from the money. Establishing the legitimacy of the source of funds, any frequent unusual deposits onto a casino account for a client, or any frequent withdrawals by a player from their account. So also these are indicators of suspicious transactions. So there has to be justification for those. That is what we mean by you establishing the legitimacy. The clients have to explain the justification for the withdrawals, unusual withdrawals or deposits, or multiple nominee accounts that they hold. So there's need to explain why do you need these multiple accounts as opposed to having one account where your money is deposited from the play. So that is what we mean establishing the legitimacy. Are these proceeds or resources that you're holding with the casino on your account legitimate? Why is it that you have numerous accounts here and there? Why not have one where all your wins, monies are posted to that account? Because we mentioned that structuring is one way of laundering money. Having numerous accounts can mean that they're trying to structure to avoid any alert on one account that, oh, there's a huge chunk of money on my account, so there's an investigation. So you query the numerous accounts, you query the numerous withdrawals, you query the unusual deposits. Why? So that they give you a justification or a written statement. That is what the law says. Reporting suspicious transactions, we have discussed this. Conducting an independent report is another requirement. We have the powers as FIA to issue directives to an accountable person. So we issued a directive to the casinos to do the audit. Though I don't know how many, I don't have the statistics yet regarding how many have complied, but what we wanted to communicate today, after this, we shall see what are the repercussions for non-compliance. What this independent report speaks of is you are supposed to assess the effectiveness of the controls that you have put in place. What controls? Everything that we have discussed. Basically, the external auditor comes to audit what you have put in place. Your customer information form, is it adequate, that it addresses all the aspects that the law says you need to capture from a national, from a foreigner, from any client, all the CDD information that you need to obtain from an individual. So if there are gaps, then the auditor makes recommendations in that report. There's a requirement that you have to train your staff internally. This is the role of the money laundering control officer. You train them on what? On any regulatory developments or in the law and on their legal requirements of the law. So the auditor will come in to assess the material, the training material that you used. Did they sufficiently address the legal requirements? All of them, whether it's adequate or inadequate, and makes recommendations. So still, when it comes to PEPs, how do you treat PEPs? Is senior management approval there? Is the source of funds there obtained? Do you have mechanisms to identify the PEPs? If there are gaps, he makes recommendations. So he's going to assess you on each and every obligation, how you have assessed, how effective are you, and if there are gaps, the report comes out with recommendations. So from our end, we review the recommendations, ask you for an action plan. How are you, within what time frame are you going to implement these recommendations of the auditor? Then we monitor the progress. So the file, we're required to file compliance reports to FIA. And this is the template, the annual reporting by 31st January of every year. And it comprises of all these legal obligations that we have discussed. It is basically asking customer due diligence. Did you conduct? How, if you did, comply. If it's a C, you justify the C, that this is how I obtained A, B, C, and D, as the law says. For the PEPs, how are you treating them? Senior management is approval is obtained, ongoing monitoring. For high-risk clients, how are you treating them? Enhanced due diligence, and this we do A, B, C, and D, as you have discussed. So if you have complied, you justify your C. If you have not complied, you give the reason why you have not complied. Reporting large cash is another obligation whereby any play that is made on an account of a client that is equivalent to 20 million and above is supposed to be reported to FIA on a weekly basis by Tuesday of every week. So also aggregated transactions within the 24 hours that equate any place whereby the money worth the play equates to 20 million within 24 hours. Those are the aggregated. If someone drives within the 24 hours has played 4 million, bought chips worth 4 million, 3 to 12, but when you add them, they equate to 20 million within 24 working days. That is, you have to report to FIA. 24 hours. So 24 hours, not 24 working days. You have to report to FIA. So therefore, please make sure that you comply with those obligations. However, we note that on inspection, there is a challenge of the board. The board is not so much kept in the loop. It has to be involved because the tone starts from the above. And the reporting also has to escalate to the board. The board has to know how are you performing in terms of the suspicious transaction reporting, the numbers, because they are the ones that are going to take in the risk of the casinos. So they need to have a picture of what risks they are exposed to as casinos in terms of compliance. There's also a challenge of the lack of a proper compliance program. Casinos have not filed their AML policies to FIA. So the numbers are still low, very low for the casinos. So there's need for compliance. The Lotteries Board, I'm sure, is online, so it needs to take note of this to ensure, since the sole responsibility lies on them to enforce AML CFT compliance, and I'm sure they have a compliance function to ensure that these casinos submit their policies. So lack of integrated systems, actually the ongoing monitoring, how the ongoing monitoring can be made easy is through purchasing the IT systems that can enable you to monitor on an ongoing basis, whereby you command the system that any amount that is equivalent, any purchase that is equivalent to 20 million, or any purchase that is equivalent to 20 million in a day, once aggregated, to flag it. So these IT integrated systems, they can enable you to flag and easily monitor the transactions. So there's need to put that in place also. And adequate customer due diligence has to be obtained. So those are some of the gaps that we identify in on inspection. Also the compliance program. A complete AML CFT compliance program comprises of putting in place the policies and procedures. I've mentioned that the policies are not coming in. Also having a complete compliance function. So the casinos must have a complete compliance function. For you to say that we have a complete AML CFT compliance program, policies have to be in place, complete compliance function, the training has to be done, and the audit has to be done. So those 4 aspects are very important for you to say that we have a complete AML CFT compliance function. So I think this would be our last part of the session today. I've committed money laundering, the offense. I've facilitated the commission of this offense as a staff of a casino. I did not report a suspicious transaction, yet something really was flagged in the system. If you have the IT system, or there was willful blindness, something is just on the face of it, but you deny to go silent and you don't report. So you facilitate money laundering. Once the investigation is done, we realize that these were proceeds from a criminal activity for your client who played there, but there was willful ignorance on your side. Or if it's a casino itself, it did not take the responsibility to report this. So depending on who is taken on, depending on what the investigations reveal, whether it's the staff that is taken in or the casino itself that has facilitated money laundering, these are now the penalties regarding the commission of the offense of money laundering or facilitating money laundering. If you're taken on as a natural person, an individual or staff, Yeah, it attracts a fine of 2 billion shillings. They are prohibitive in nature so that they wow you not to commit the act. Or 15 years imprisonment, and or both. The legal persons, and another issue why they're huge, money laundering. We discussed the gravity of the problem in terms of how much money the country loses in a year. It's huge sums of money that have been laundered. So it's not fair to give small penalties, yet the country has lost a lot of money. So that's why also the penalties are huge. So legal persons, if it's a casino that is taken on, it's 4 billion Uganda shillings. So other offenses, these are under the act. Tipping off, for example, if you tip off a client that have filed a suspicious transaction to FIA regarding your play, it's unusual, it's out of range, and FIA is investigating you. That is tipping off. So other offenses include tipping off, you tampering with evidence if you are investigating, or there's a restraining order for you, restraining you from tampering with a certain computer, which will aid our investigation, and you instead tamper with the computer, you don't comply with the restraining order, or you refuse to aid the investigation of FIA by providing information. So all other offenses, examples which I have just given, the penalty for natural persons is 660 million, or imprisonment of 5 years, or both. For legal persons, a fine of 1,400,000,000. And for any continuing day of the offense, an additional 100 million. It attracts a penalty of an additional 100 million. So those criminal penalties are in regards to the crime or the criminal acts of money laundering or facilitating money laundering and other offenses we have discussed. There are others, but I'm just giving you a hint, the categorization. So besides those, we have now the sanctions, the fines, pecuniary, regarding the breach or non-violation or violation of the legal obligations that we have just discussed. Failure to register, failure to report large cash, failure to report suspicious transactions, failure to put in place internal policies and procedures, internal policies like the controls, or to monitor complex, unusual transactions. Those are the internal controls that you need to put in place. In the event that you have the high-risk clients, you monitor the transactions or purchases for high-risk clients. Those are internal controls that you have to put in place. So failure to do all this, to appoint a money laundering officer to do a risk assessment report. We had not hinted on a risk assessment, but we shall discuss the risk assessment. I think I'll end with it because it's in our conclusion. So failure to do this attracts pecuniary fines, monetary fines, and this illustrates the fine for each. There are many, but I've provided this, and we shall share the material so that you get to know, if I don't file the annual compliance report by 31st Jan of every year, what monetary implications does it have to the casino? If I don't file the large cash, what monetary implications? If I don't register with FIA, what monetary implications? So therefore, what lessons do we pick from this? First, you have to adhere to all the legal requirements. But most importantly, for you to be in position to safeguard your institution or casinos from the manipulation of the criminals, the risk assessment is very important, because it is the risks, as I mentioned, that us as a country, we have to first understand the risk that we are exposed to, which sectors are exposing us to a high risk, then you move accordingly. So that's like a clear roadmap that you have to follow. First, have to understand the nature of the problem that you have. Then you put in place internal controls that are commensurate, that are equal to the nature of the problem that you have. That is what the law says, that you have to assess the risks, even you as the sector players. you have to do a risk assessment whereby you need to assess the risks, come up with policies, controls, and procedures to mitigate the risk. So you find that before you draft this AML CFT policy, it has to be informed by the risks that you have identified. How then do you assess your risks? You're going to look at 3 or 4 parameters: the nature of your clients, the products that you have, the delivery channels of the products, and the geographical location of your business. So whereby the nature of your client, now this forms part of your risk assessment report, because we also get queries about how do you have a template? How am I supposed to do this risk assessment report? So in your narrative, in your risk assessment report, please, when it comes to customers, you need to assess how many foreigners play in your casino, how many nationals play in your casino. For the foreigners, where are they based? Are they based in high-risk jurisdictions? So you need to make reference to the FATF list that it gazettes on high-risk jurisdictions. So that will inform you of the customer risk that you're exposed to. You find that for foreigners, it is easy to identify them. You know their address, they will easily provide the address, the national ID, email, contact. But the risk is with the foreigners. So what is your customer risk in terms of what clients do you have that are foreigners, and do they originate from high-risk jurisdictions? So for the customer risk, you're going to look at the origin of your clients, and you say customer risk, we are either exposed to a high risk, low risk, or medium risk, whereby now you will get a ranking on a scale of 1 to 10. On 1 to 3 is our low, 3 to 7 is our medium, 3 to 6 is our medium, 7 to 10 is our high. So on your customer profiling, because you're supposed to profile your customers, how you're supposed to know whether your customers are high risk so that you deal with them by conducting enhanced due diligence, you're supposed to profile. So the lottery's expectation is that you must have a profiling form whereby you're going to have these parameters. That for our client, the origin, client risk is a foreigner. So you, based on that scale that I've given, that the foreigners are going to be 7 or high risk because they come from highest jurisdiction. So you give them 7. So the nature of the products, you know what products that you have. But if the product accepts cash, because cash, there's no audit trail, the product is high risk. If the product has no limit in regards to the number of chips that one can purchase, then it is high risk, because criminals like highly cash intensive products. By cash intensives, we mean the value of the chips, no limit as to the worth, how much one can purchase, then it's high risk. So you find that on your profile form for this client you're trying to profile, on product, they'll be high because there's an element of cash, you're accepting cash, or they paid through cash. And the limit, there is no limit. So this is, it could be a 7. Geographical location, where are they originating from? So that is the profiling for a client, whereby you're going to get a total and divide it to get an average. So the average will inform you based on this scale that we identify, whereby if you have 3, 3, 3 on 3 parameters, that is 9 divided by 3, the average would be 3. So on our scale that we agreed on, 1 to 3 is low, so that client will be low. So that is the client profiling. But however, the casino risk assessment is going to look like this. You're going to assess the client customer risk. How many foreigners do you have as opposed to nationals? If you have many foreigners from high-risk jurisdictions, you rank yourself like this. So geographical location, are you scattered? Are you operating in different jurisdictions? More so high-risk jurisdictions like the border, then you rank yourself. We are not operating in those jurisdictions, therefore we are low risk. That is a 2. So for the nature of the products, what are the nature of the products that we have as a casino? Are they highly cash intensive? Do they allow high volumes? Do they allow use of cash? Do they, other products like use of credit cards, do they allow high volumes whereby the credit card can hold high volumes of money on the account of the player? If so, it is high risk. If not, it is low risk. So the delivery channel, what delivery channels are you using? Is it through technology? Can someone withdraw money from the bank through use of financial institutions or exchange in a foreign exchange? Do you have those intermediaries that you're using for someone to cash out their wins or something? So if they are there, then you assess the risk as to those delivery channels. So that is what we mean by those parameters that you need to have in place. So therefore, it's important for you to have a strong, robust risk management framework in place, because now this is what is going to inform you what is going to be in a policy. How are you going to mitigate these risks? The part of how you're going to comply with the obligations, you will also include that we have a risk profile of this, and this is how we're going to close the risk in your policy. So basically, the internal controls are very important in the risk mitigation, because if you identify the client risk, then the internal controls would be that we are going to do enhanced due diligence. This forms part of the report as well. So the report has to have these inherent risk factors that we have discussed: geographical, customer, delivery channel, then the controls. How are you likely to mitigate the risk? We are going to train, we're going to do enhanced due diligence, we are going to obtain adequate customer due diligence information. We are for the PEPs. We note that we have PEPs, and that's a risk, but we are going to obtain senior management approval, source of funds. So that's what we mean by controls in place. So please make sure that you're on the right side of the law by complying with all the legal obligations, so that you do not expose the casinos or your entities to huge fines in the law. So these are the references that you can refer to for extensive reading. Can make use of our website and these other websites. So thank you very much for your attention. I really appreciate. At point, I think Alan will help me take note of the questions in Q&A so that we attend to some of them. But if your question is not skipped, in the event that your question is not addressed in the Q&A, I'll give you our compliance email. That's compliance@fia.go.ug. Compliance is COMPLIANCE@fia.go.ug. Please, any query that you have regarding to developing the policies, regarding to coming up with the risk assessment report, regarding to the annual compliance template, please feel free to contact the compliance team. With a question regarding registration, kindly feel free to contact us. Our mobile number, if you want to make a direct call, 0776 75 7028. 0776 75 7028. Thank you very much, Alan. Please take on regarding any questions in the chat for attention. Okay. Alan, are you able to unmute yourself now?
Yes, I am able to. Can you hear me?
Yes.
Yes, thank you so much, Manager, for the presentation. For clarity about the email she has shared and the phone number, I've put them in the chat section. So those who have missed to get them, you can go in the chat section and you get the compliance email and the phone number as shared by the manager. Manager, I don't know if you have questions in your Q&A, but from the chat section, fortunately or unfortunately, I think people were able to grasp everything you said. We have only one question from Robin Adrian. Is inquiring about the sanctions of failure to report large cash transactions. His inquiry is about the weekly reporting. So he's inquiring if he does not receive any large cash and any suspicious transaction within a week, is he also obligated to report to FIA that this week we didn't receive any large cash and any suspicious transaction, or he can report when that transaction happens, or it's just a mandatory thing, he has to do it per week, whether he receives or not? That is the only question that has popped up in the chat section. In case you have any that is in your Q&A, you'll be able to address that. Maybe the other thing is to clarify that we shall be able to share the presentation after here. So those of us who have missed will be able to fill you in so you can be able to follow up with the presentation. Thank you, Manager.
Sorry, I was muted.
Okay.
So I was saying that thank you, Alan, for that question. If you don't have anything to report during the week, no transaction was made that is in line with the thresholds that are required by the law, 20 million, you will not report, because we do not encourage filing a new report. The reason being, it will clog the system. So also one thing that I forgot to mention, where do you report? I'm certain that you have been onboarded on GoML. So you have to report, you know where to report, that is the GoML system. The new reports are not allowed, but you shouldn't take advantage of that because I will say that I had nothing to report. Once an inspection is done and there is actually realization by the regulator that you sat on a large cash, because that's one area that they audit, they assess. How are you reporting? What was reported to FIA and what did you sit on? So once that is identified, that means you did not comply with your reporting requirements, and the fines will be imposed. So to answer the question, no need to report if there was no transaction equivalent to 20 million in a week or in 24 hours. Since that was the only question, I'm glad that
Manager, can we take a few, maybe if people are able to raise their hands and we can be able to take up those questions, maybe?
Yes, we can.
Okay, so in case anyone has a question, feel free to raise your hand, we'll pick you up.
So her face is no longer showing.
Yeah. All right, Alan, I think there are no questions.
Yeah, I think there are no questions.
All right, thank you. I think I'll take the time to make the closing remarks. Thank you for taking time to be part of this session. We appreciate. We have had full participation of most of the casinos from beginning to end. And we are glad that we've had this interaction for you to sensitize you on your obligations. What we urge you is to make use of our email and mobile so that you comply with the law. And what this means is it will boost our compliance levels so that we ensure that the sector is safe and sound, so that we ensure that that risk in the national risk assessment goes from high to low, because what that means is our concentration is on the sector in regards to supervision for us to demonstrate a risk-based approach. So let's work hand in hand to ensure that we uplift the compliance levels of the sector. Together we can do this, and thank you very much from FIA. We normally hold such trainings, so when we still call on you to be part of these trainings, please, even those that have not received the circulars, kindly inform them to attend, because we want to update our database to ensure that the entire sector fully participates in these trainings. Take note of the administrative sanctions. It's a new law that has been enacted this year. So therefore you have to find yourselves on the right side of the law so that you're not exposed to the penalties. Thank you very much. You're free to leave at leisure. I will close the meeting in about 2 or 3 minutes.